Good morning, everybody. Welcome to Wise Tech for Wise Money. I'm Gary Wayne from A1 Solutions, where we help businesses improve efficiency and scale through intelligent use of AI, technology, and operational systems. Today's episode is titled Building Wealth the Right Way. Yoel Bank on LM advises clients and long-term thinking. In this episode, we're looking at what it actually means to build wealth the right way, how advisory firms operate in practice, how responsibility is handled, and how long-term trust with clients is built and maintained. We'll be discussing Yoel Bank's journey in wealth management, how LM Advisors works today, and how the firm supports clients in building, protecting and sustaining wealth over time. I'm joined today by Yoel Bank, partner LM Advisors, based in San Diego. Yoel, it's great to have you here. Happy New Year. Before we get started, perhaps you can give us a little bit of a history about your journey, how you got into this business, and what led you to LM Advisors.
A pleasure to be here with you, Gary, and Happy New Year. All the best for 2026.
Happy New Year, yes. Let's hope it's...
So I joined LM Advisors about 10 years, over 10 years now. My previous background was in management consulting. I spent 7 years advising large firms on strategic matters. And while I truly enjoyed the challenge of tackling like big problems and try to find opportunities for these large companies, it was always hard to see kind of like the end result, because these are big corporations and some of those recommendations sometimes would be implemented, some of them would take time, and there was always a lot of moving parts that it was hard kind of like to actually see. But what I learned through that journey is that I really enjoyed building relationship with some of those top managers that would sit at the C-suite in those corporations and try to understand what challenges do they have. And in many cases, they would be asking for my advice, and that advice was probably was going beyond kind of like their company. It was more related to their careers or to personal matters. So I translated that into what I do now. I've been investing for now over 20 years. I've always enjoyed the markets, the economy, interest rates. That is my passion. So I combined that with my newly love for advising and helping people. And so I joined LM Advisors as a partner 10 years ago. LM Advisor has been around now for over 40 years. What we do is we manage investment portfolios for high net worth families and individuals. But truly what we do is we partner with our clients. We see our clients as our friends, as our family, and we try to understand what do they need to do, what are their problems, what are their concerns. And based on our expertise, we try to put ourselves in their shoes and say, okay, if I understand what the objective of my client is, but what the expertise that I have and the time that I have devoted to this industry, what are the decisions that I need to make every day? And that's what we do. We create customized portfolios for each of our clients. Every client is different. Every client has a different need, a different concern. And we try to be very disciplined and very approachable to our clients and advising them on how to plan their wealth, how to invest their money, and how to navigate all of the everlasting kind of like challenges that the industry is bringing from a compliance perspective, from a regulatory perspective, but also from a geopolitical perspective, and that's what we do.
How many people involved in LM Advisors? Is it a big partnership?
We are 4 partners, and we have a team about 20 members. Very proud that most of the people that we've had, they've been with us from the beginning or for many years. So we are also here an internal family, and everybody tries to. The mantra here is a client is of LM Advice, a client of everybody, and so the client calls here to the office, and then everybody is eager to help. Obviously, some of us have the expertise to advise them on certain matters, but a client is a client of everybody, and we're very proud about that, and that makes us unique in that sense.
Do you specialize in any particular area, or are you generalists?
My focus is on the portfolio management, and so that's where I spend most of my time. I um, I spend a lot of time working with our custodians where we implement our portfolio investments. I spend a lot of time designing portfolio models and for different objectives. I lead kind of like the research team to try to identify opportunities. And then also I sit on the investment committee, and that's where we make some of the most important decisions, especially during turbulent times where we need to kind of like move the portfolios. That's where we do kind of like do some of the hard work. So that's my area of expertise. Having said that, we're a very small team, and so therefore I get to spend time on all sorts of things, like for calling from HR to AI and technology implementation to regulatory. So we spend time in different areas, but most of my time is portfolio management.
You said before when we spoke that the job's not just about ideas, it's about responsibility. What early experiences shaped how you think about that responsibility today?
I think that comes from my own attitude towards money and wealth, right? It's so number one, and I guess there are two principles here, right? Number one, the compounding effect, right, of money, and that's a concept that the earlier people understand, the more powerful it becomes. And so if you think about it, at any point in time, you can spend this money or save it and invest it, right? That's a decision that you can make every single day, right? And then you spend it today, you get something in return that you're probably gonna appreciate today. You don't spend it, you save it, and you invest it wisely. You don't get anything today, you're gonna get something in the future, right? But that compounding effect of that investment, if it goes well, it is exponential, right? And as the sooner people understand the exponentiality of that, the more people can have attitudes towards savings if they are in a position to do so, right? So that is the first part that I would say. And the other part is what I alluded to before, is just my passion for helping people make decisions, and try to empathize with them and put myself in their shoes and try to understand what should they do or what would I do if I would be in their situation. If you combine those two things, it brings up big sense of responsibility. At the end of the day, our clients are putting literally their savings, their wealth creation in our hands, and it's not the same if I'm gonna make a decision with my own money, but for me making decision with others' money, right? Especially clients, it's a sense of responsibility that to me that's kind of like it's very reward for me. It brings me a sense of purpose, but at the same time, I think just understanding that the importance of it, and especially when things can go wrong, you have to be extra diligent. You have to think about all of the possibilities, and then sometimes be willing to say, okay, I'm willing to give up a little bit of return here, but I am making a decision that is guaranteeing that like a bad outcome probably is going to be averted.
What things in life or experiences in your life changed how you approach clients and formed your view about creating long-term relationships?
So the relationship side, I think for a very long time, I've always found people approaching me for advice in general, right? So that comes from a sense of just being centered, self-aware, being able to analyze different outcomes, different possibilities, and try to put everything into scope, into a framework that people can understand. I took some coaching classes back in business school, and in that experience, really, they teach you how to not. I mean, you're not telling people what to do. You're just helping people organize their own ideas and their own thoughts so they can decide what to do. And so that approach to me just it's a conversation to really try to understand what the other people is going through and what are their true objectives. And sometimes their stated objectives are not the true objectives. And so you have to really peel that onion through a lot of listening, a lot of questioning, a lot of scenario planning, and that's when you start to learn. Okay, their true objective it's a different one. So that is one. I mean, other one is just personal experiences throughout my family, right? When I saw the type of trade-offs that they used to make, my parents, my grandparents, I remember, in terms of investing in different businesses, in terms of being conscious about just money in general, and that's just it gives you a sense of appreciation of kind of like the opportunities that you get. You have to appreciate them, and you have to know, okay, I don't need to spend everything today. It's okay. It's okay. Like if I'm in a position to save a little bit, it's a good thing. And so that I just learned that just by observing like role models around me. And I remember as soon as I started to make money from a salary perspective, I saw some of my colleagues buying fancy cars and doing things like that, and I was like, no, I'm gonna save it first. I'm gonna put it in my 401k, my retirement account. I'm gonna maximize that, and then whatever I have left, then I can spend, and it's okay if it's a different type of car. It's okay.
Talk me through the client process. When a client first comes to you, what happens, how you build a picture of their goals, their situations, their comfort with risk. And once the plan is in place, how do you keep it relevant as markets change and clients' lives evolve? I mean, we have a lot of geopolitical situations going on in the world, the market is volatile. How do you deal with that whole process?
Yeah, so we try, before a client becomes a client, there's probably several interactions with them, and we get to know them on a personal level. We'll ask for references as well. We want to know who they are. We want to understand their businesses. We'll probably, if there is public information, we'll dig into their finances as well. We have then a very specific questionnaire that clients answer. That is just a conversation opener. And that's where, like, some of those questions, when you say, what is your attitudes towards risk? Do you really understand your objectives with this? Right? People say, oh, I want great returns with no risk. Well, okay, so let's talk about that, because normally it's one is more important than the other one. It's not, and you can probably not achieve both, right? And then, so we talk through with the client through that questionnaire, and then that's where we try to really press them to choose, okay, what is your true objective today with this? And for us, it's really three possibilities. Capital preservation would be one of them, and some people, that is okay. That is what they want, and so a very modest return with capital preservation will be okay. For other people, it's the cash flow. They need the cash flow, either because they need it for their day-to-day living, or because it gives them the sense of return, right? So for so many people, it's like, oh, yeah, I know stocks can go up or down, but to me, knowing that I'm gonna get a certain amount of cash flow every year, that's what matters to me. And the third one, obviously, is more growth. So we try to distinguish kind of like, what is the main objective? Like, people want a little bit of all of them, but one of them has to be the main one, and we try to distill which one is it. And once we do that, then we try to understand what are the liquidity needs for the clients. Very important. How much time? What is the time horizon? Are they looking at this set of wealth for themselves, for their retirement? Maybe some of them, they already looking at it for their children or their grandchildren. And then we look their attitudes towards risk. And that is sometimes the hardest, because people will say, oh yeah, I understand the market are volatile, and I understand that at some point my portfolio is going to come down, and I'm going to be patient about it. And so we try to pressure test that and give them a few scenarios and just to see their visceral reaction. When we get it wrong, sometimes we find out about that 6 months or a year later when there is a real correction, and they told you that they had the stomach and the appetite kind of like to navigate that, and they're calling you, hey, please sell all my portfolio because I don't wanna drop it more. So it's so important to get that one right from the beginning. It is really, really important. And normally when we go through crises is when we find out, did we do a good job a year earlier or 2 years earlier when we had that initial conversation, and have we done a good enough job over the last 2 years when we had kind of like our monthly or quarterly conversations with our clients in understanding them. So it's a rigorous process. It is critically important to do it at the beginning. Now, to your second question, what we always say, it's a dynamic process, right? Your goals, your original goals, they don't need to stay the same. Things change in life. You have a new, your family grows, or your kids go to college, or your business is thriving or not thriving. Like, it's a dynamic thing. And so we try to have this type of conversation at least twice a year with clients and say, has anything changed from your standpoint? This is our objective, remember. Has anything changed? And sometimes things do change, and then we make adjustments to the portfolios. For us, we think that getting profiling our clients correctly is probably the single most important thing that we can do, because after that we know how to invest the portfolio accordingly. But when it is not invested properly, 90% of the time it has everything to do with we have not profiled the client correctly. And so we spend a lot of time thinking about that and having conversations on that matter.
Service is where good firms really stand out. How do you stay close to your clients over time? How often are portfolios reviewed? And how do you communicate during the periods of a relationship? Do you email? Do you see them regularly? How do you make sure clients generally understand what's happening with their money?
Yeah, we're very, very fortunate and blessed that our clients have really trusted their wealth into us, we're very privileged in that matter, because most of the clients, our portfolios are discretionary, right? So once we have profiled a client, we can invest it according to our models. And our clients trust us, right? So they let us work, it is very hugely important, because whenever we do need to make changes to our portfolios, and we're very active in our investment process, we can implement across all portfolios without the need to have hundreds of conversations with clients, right? Having said that, this is an area where we have invested. So we, from the beginning, we always did independent client statements that just summarizes the portfolio in a more simplified way that our clients could understand. Because if you have looked at some of the statements that the custodians provide, it's very hard to understand them. It's like there's a lot of questions around, okay, what is my expected cash flow over the next 12 months? What is my return year to date? What is my asset allocation? Like, these are all of these questions that you would think that in a custodian statement you can answer them. It's very hard unless you really know what you're doing. So what we've done from the very beginning, we have simplified that information in a statement that we provide to our clients on a monthly basis. Okay, so most of our clients trust or look at that statement, and that's where they can, get the information. We have automated that process completely. So everything, all of our accounts, and we work with more than 10 different custodians, right? Just get a sense. 100% of them are. We receive a data feed on a daily basis. We use an external system, right? That organizes everything. We can combine portfolios, so So a client can have more than one account in different custodians. We can combine them in a single portfolio. And so now our clients these days, on their app, they can come into our portal and look at their positions, look at their activity. Their monthly statement is going to be uploaded in our portal, right, on a monthly basis, and they can access it. So they have a lot of access to the information directly, right? We send communications, we send news or market commentaries on a regular basis, right? So that's kind of like one aspect of it. The other one, there is nothing like having a face-to-face interaction, right? So we'll go and travel a lot and try to be in front of clients. Some clients want to do it on a quarterly or maybe twice a year basis, and they are fine with it. And they tell us, I'm busy. If I have a question, I'll reach out to you. Otherwise, let's just meet 4 or 2 times a year, and that's enough. Most of the clients, they want more regular conversations, so we'll do either in-person meetings or virtual meetings on a monthly basis with our clients. They tend to be 5 minutes on the portfolio, 5 minutes on the market, and the rest of the conversation is their family, their businesses, their concerns, questions around wealth planning. Like it's really like an opportunity for them to take advantage of our, I guess, expertise in different areas, and we're very happy to provide that. And that's how you build very good relationships. We get invited to their weddings, their birthdays. I mean, we try to be very, very close to our clients, and it's in a genuine way. I mean, they are in many cases our friends. And so we know what's going on with their families, with their kids. And so that also makes the relationship more personal. And when it's more personal, also on the investment side, then it's like I'm investing like if I would be investing for my mother, right? When I'm investing my client's money. So again, going back to that sense of responsibility, it's a lot.
Let's talk about fees. How do you charge clients at LM Advisors?
I mean, it's a transparent model. We charge assets under management, tends to be anywhere from a point to half a point, right? We don't like anything that deviates from that model in the sense that we don't charge based on performance. There's a lot of bad incentives if you do that, and it's highly regulated, so basically you cannot do that. We let our clients aggregate different accounts, right? So to try to be, I guess, friendly to them. We see our fee structure. I mean, if we do a good job, we're gonna keep the client for generations, and in many cases, we are working with the third generation, right? So we're not trying to optimize that for us. On the first year, right? We try to keep them for a long time. And if we do a good job, they're going to send us more money. So in many cases, we'll just say, okay, maybe they're starting with a $3 million account. Okay, but if we know they can get us to $5 million, then we'll probably charge as if it would be a $5 million account. And then we'll give them a year or a couple of years to get there.
Being independent, does that help you have greater flexibility in the way you approach fees, etc.?
We're very proud of being independent and our independent thought process. So number one, we truly try to put our all of our interests on the client side, and that is so. I mean, when I joined LM Advisors, that was probably the single reason that I chose this firm. Like it's not only like it's something that we say, it's something that I experience how people do it, and so in many cases. We'll go far and beyond to try to be on the client side and try to really guard their interests and fight for those interests in a very complicated industry. So that is paramount. That is paramount for us. Sorry, what else?
That was just how being independent affects your views.
Yeah. So let me
check. Flexibility.
So that allows to be. So I'll give you an example. We have different custodians, right? So, and each of them have pros and cons in that sense. We'll try to understand again what the client needs, what the client's objectives are, and they will choose the best custodian for that client, right? And they will recommend that. At the end of the day, it's the client's decision. but would recommend based on that. So that's one example, right? We don't we don't need to sell any products or any securities, right? We are independent money managers, and so if we're investing, most of the time we'll invest in low cost ETFs on direct bonds and stocks. And if we're gonna use a mutual fund or something else, which is rarely, but sometimes we do use it, it has to be for a good reason, right? We're not incentivized to do any of that, and that independence is very proper. Also, we can decide which clients we take and we don't take. I mean, we are fortunate in that sense, and if for whatever reason in our due diligence process we don't think that's the right client for us, we'll just say no, thank you, and so that allows to. So there's a lot of advantages on being independent. We can be going at our own pace in many senses. Now, as you probably well know, Gary, there's a lot of consolidation in the industry, and there is a lot of pressure for that. And the type of investments you need to do on areas like AI or compliance or having a robust alternatives platform, right? There's a lot of reasons why that consolidation, that scale, kind of like there is like it makes sense, right? So that's the challenge for us, right? We are still a medium-sized RIA, and we have to compete with some of the larger ones, right? So I have no doubt that we win in relationships and how close we are with our clients, and we win in truly putting ourselves in the client's shoes and guarding their interest. But we're competing heavily in product offerings. We're competing in our technology, in our compliance processes, in our ability to market to new prospects, right? So there's a lot of areas where scale matters, and yes, we've been growing a lot organically, but a lot of our competitors have been growing inorganically, and so they're probably now by now 2-3 times as big as us, and so at some point it does matter, but so far we're very very proud of our independence, and we think it has served really well our clients.
How do you measure performance? I mean, a lot of people measure against the S&P and other things. How do you actually, just as a stick or a rule of thumb, measure how well you think you're doing?
I mean, you have to compare it against a benchmark, and normally it's a composite benchmark, depending again on the investment objective of each client, right? If it's going to be more of a cash flow oriented client, the S&P is not the right benchmark. Typically, we'll do a composite of the U.S. Act for fixed income and the ACWI for equities, and depending on the client's portfolio investment objective, it's going to be a different mix for each. But I would say more importantly than that, it is also what I measure a lot is our upside and our downside capture, and that to me that's probably very important for our clients. We're very proud to say that whenever markets go down, will go down depending again on the portfolio, but sometimes we'll go down 50, 60, or 70% of what the market is doing, right? And so we're putting risk mitigation aspects in our clients' portfolio that are working in those situations. And when market goes up, we want to be as close as possible to that. Sometimes we'll be ahead, sometimes we won't, right? But that trade-off and say, okay, we'll go up. When the tide is going up, all the ships are going up, right? And so it's very easy to kind of like I say, oh, I'm doing a great job. It's really when there are crises is when you can measure them, kind of like who's doing a good job, and so that's probably where we measure the most. So there are specific years or parts or I guess events in the market where I like to measure ourselves, and I like to have those conversations with our clients about because at the end of the day, we want our clients to sleep well at night, and we're guarding their wealth. So we have to think about risk management, and sometimes investing in the market by itself, it doesn't allow you to do that unless you are proactive on it.
You said LM Advisors has been around 40 years, which usually means growth comes from reputation rather than gimmicks. How do you generally find new clients, or how do they find you? Is it network, professional referrals, or long-term relationships, generation to generation? How do you actually build your book?
Yeah, I would say very proud that most of the cases our clients who refer us to their friends, their families, and that is obviously very economically advantageous for us. But also there's other advantages. Number one, that means the client that is referring you, it's a happy client, right? So that means that client is going to stay with you for a long time. Number two, there's a higher likelihood that the client they're referring to, it is a good fit for us. And it's easier for us also to, as I said at the beginning, like we'll ask for references for our clients. So it's also easier for us to vet that client and make sure that that's a client that we want to admit into our practice. So I would say most of that comes from those referrals. We do have a small team of people that are actively like reaching out to people, yeah, through networking, through events. We're not very active in digital marketing yet. We think that's a tough nut to crack, and we can talk about that in a bit if that's useful. But then we're trying to bring people into our firm that have very extensive networks and that they are very well versed in the industry to help us bring new clients. And that's an investment that takes a little bit of time, but over time that paves the way really well. And then we're being strategic. I'll give you an example, and we haven't talked a lot about this yet, but a big portion of our clients are from Latin America, specifically in Mexico, right? Now, most of our Mexican clients are from Mexico City, but we are actively opening other territories within Mexico where there's a lot of opportunities, and we're being strategic about how we go about it. So sometimes you do need to kind of like say, okay, I'm going to carve out a new market that I want to attack and have a strategy to do that.
Cool. We can talk. I think you mentioned it on cross-border stuff about even working in the UK and stuff like that. So we can talk about that in a minute. What I'm interested in at the moment is, you said about ALM advisors combining the care of a family office with the discipline of an asset manager. Where does the client actually feel that difference? Is it the decision-making access or decision-making process of a long-term perspective you take?
So the family office part of it, even though we're not structured as a family office, as I said, we're probably just going to spend 70% of our time with our clients on family office related matters. And where we can add most value is when it comes to wealth planning. And a lot of clients will invite us into their complicated lives, right? And say, okay, I'm thinking, how do I protect my wealth? And for example, they have different family dynamics. Some kids are getting married, others are not. Maybe they are business partners with their brothers or with their spouses. How do I protect all that? How do I organize all of that in an efficient manner that I have asset protection, that if something, God forbid, something happens to them, they're not going to leave a complete mess to their families, and then it's tax efficient, right? And again, we're going to help them navigate that complexity. At some point, we're going to bring over experts in each of those areas, right? And so, but they invite us into that process, and because we've done that multiple times in all kinds of situations, we kind of like seen it all, right? At some point, right? We've seen the good, the bad, the ugly, and so we can leverage that expertise and advise our clients and what to do. So I would say that is probably one of the areas where they get the most value out of the family office side of it. And then the other part where I spend most of my time is on the investment management side. We are active money managers. We don't like to just allocate to third-party managers. We try to do it ourselves in most cases because we think there is real cost savings for our clients if we do it that way. And then our clients are paying us to do that. We don't feel like they're paying us to then select a manager and then they have to pay the manager again. And then there's double layers of fees. Um, so they uh, so they get a lot of value just by us going direct in many cases and try to lower the entire fee structure. Like if you can lower the fee structure by 50, 75 basis points every single year, again going back to the compounding effect, you do that for 10, 20 years. There's a huge difference there. And so
Without a doubt.
right. So that's where we are like, extremely, I guess, efficient for our clients.
Do you have a minimum size client that you take on, or will you take on any size client?
Because we are directly investing our accounts, we sometimes it's hard for us to invest the way we like to invest below a certain amount. So our sweet spot is 3 to 5 million, and then obviously we have much bigger clients. We'll happily take a $1 million client that we think has potential to grow. And then for clients that are below a million, it's going to be on a case by case basis. Uh, Many cases we have a long-term relationship with a family, and they say, "Hey, but my son wants to open a small account, and we want to start investing his account. It's going to be a $200,000 account." Of course, we'll take it, right? It's part of the family, but our portfolio models are going to be slightly simplified in those cases. And we think our impact is going to be more limited. We'll try, so we'll do it on a case by case basis.
What about technology? I think you mentioned that you said you'd invested heavily in a platform. You've upgraded systems and built your own tools. What sort of tools did you build, and what problems were they trying to solve, and how far have you got with it all?
Yeah, I guess I mean, it's always the classic question buy versus build. And in some cases, we've gone and buy like the best system out there for the specific workflow that we're trying to solve. In other cases, we have needed to build because we have a very unique way of investing that no system is flexible enough to kind of like. And so we have developed systems in place. What we have developed in place is our ability to, uh, of course, look at the holdings of a portfolio and then be able to answer different questions. Is it within ranges based on the risk management, or is it deviating? And we're very specific about what we mean to be deviating. Yeah, not only do you have too much equity or too much of a certain industry, but also you have too much of a specific issuer. How about your duration in your portfolio? How about your average rating? How about the percent you have in a specific industry? So we have all these ways of risk managing the portfolio and manage deviations. So we do that through our system. The same system will recommend rebalancing a portfolio. So if we have all of the securities that we like. We have ranked them right to top rank, second rank, or try to avoid. And then based on that, the system will recommend how to rebalance a portfolio. And so it's a I mean, it's an entire algorithm. It's not using a lot of AI, but it's using a lot of coding. And so we have coded that internally. We've used that same system to allocate to new securities, right? So we are, as I said, we're actively money managers, and because we have a certain expertise in fixed income. Let's say that we have found a new security we want to add. The system will recommend which are the portfolios that there's space for this security to buy them into, right? And it, again, has to do with their current risk profile, existing cash or non-cash position. Do they already have a exposure to that issuer or to that industry? Would adding this security would cause a deviation from, let's say, from a ratings perspective or from a duration perspective? So therefore, how much space do you have? So it's a very unique system. So that part is all internal. What we have done externally, but we have been able to link it and integrate it to our internal system, is our CRM, and it's our I guess financial system where we get all of the client information from the custodians on a daily basis. So that we outsource, but it's highly integrated with our internal system.
Going back to cross-border thinking, you mentioned you have clients in Mexico. I also recall that when we spoke, that you were talking about bringing advisors from the UK into the US. Um, how will that work, and what's the thinking behind that?
Yeah, I guess, I mean, obviously it's a very different market. It's a very different set of needs. But what it is important that is transferable is that um, the way you invest portfolios for a U.S. client and a non-U.S. client is just different, right? There are different rules, there are different availability of securities, there are different tax treatments, and as an advisor, you have to understand that because at the end of the day, you want to provide good adjusted returns after taxes, right? So you have to understand the local. So we have clients from different parts of the world, and we try to educate ourselves in terms of what are the differences in treatments for each jurisdiction and try to make them the best investment decisions. But for us, it would be it's a UK. It's a new market, right? UK. It's a market where, unlike other markets where we have clients from, that where you can actually custody locally, right? So when we bring Mexican clients, they are not I mean those portfolios are being custodied in the U.S. When you bring clients from the UK, most likely you wanna custody in the UK or in other parts of Europe, and so that is just it's a new set of tools and I guess capabilities that we need to bring for ourselves, and that's where when I was saying at that point in time you probably need to bring somebody from locally there that understands that. So we have a great platform, it's scalable, but you need the local expertise. You need to talk. You need to understand the local culture.
Sure.
So it would be very hard for any of us to go there and do it by ourselves. So partnering with somebody that's what would make more sense.
If you could change one thing about how people build advisory firms today, what would it be?
It's a good question. I would say a couple of things. Number one, from the beginning, think about scalability. And what I mean by that is the way you serve your clients, the way you communicate with your clients, the way you invest with your clients. In each of those instances, you have to think about, could you do that with 10 clients? Could you do that with 100 clients, right? What would you need to change in order to be able to scale? And try to design it from the beginning in that sense. I see a lot of very successful firms, but you could tell that they didn't think about that from the beginning. And so what ends up happening is that you need to have too many advisors, everybody with a small book of business, and I don't think it serves well as the clients, because then every advisor is bringing their own flavor, their own way, and then the investment portfolios, they look very different depending on who the advisor is, which is, in my opinion, not ideal. And also, it's not good for the RIA because it's just the economics are not there. So scalability is one, and then the other one I think I already mentioned, and everybody prays they do it, but you have to actually walk the talk when you say you're putting your client's interest ahead of your own. And there's a lot of areas, but from your culture, from how you hire, how you train your people, and sometimes the type of decisions you make that you're gonna live up to that, and then sometimes that comes at a short-term cost for the firm, but the returns over the long term are huge. So I would say those are the two things that I would advise a new RIA to think about.
Fantastic. So before we wrap up, I'd just be interested to know where you see the future is in the next 2 to 3 years. Where are you heading? What are you looking to change?
So I mean, we're going through a very interesting, I guess, period of our firm, because we have brought new advisors over the last couple of years to try to bring to build their own book of business in different markets, and we're starting to see success there. It takes a couple of years, and now we're starting to see success. So I'm very optimistic about what that's going to look like over the next 2 or 3 years, and we want to replicate that model. So we're going to bring new ones, But that comes at a challenge for our firm because we're still at a point where we can proudly say one of the four partners, we're gonna know every single, like at least one of us will know every single client really well, and that we're very proud of that. We really think about them as our extended family. Once you start to bring new advisors, they bring their own customers. We get to meet them. But at some point it's harder, right? So the challenge is, how do you maintain your culture? How do you maintain your highest level of standard in terms of quality and dedication of service that you want to provide, but now through others, right? So there's a lot of training, education, and tools that we're starting to implement to allow that. So I'm excited about that, but that's going to be a challenge. The second challenge is what's going on in the industry, right? I see this consolidation trend to continue. There are very few independent RIAs that are above $2 billion in AUM, for good reasons. And so for us, we're gonna continue to invest in our scalability, but we're gonna need to compete more and more with some very, very large firms. They will have some advantages. So it will be very interesting to see whether we can compete in areas like AI, digital marketing, and other areas where these firms are bringing very new capabilities that we still need to build inside.
I'm sure you will. It's a very interesting conversation. For customers or potential customers, listeners that would like to learn more about LM Advisors, where can they find you?
We have lmadvisors.com. We also have a LinkedIn page on LM Advisors. They can reach out to me via LinkedIn as well, Yoel Bank. They can call us. They can email us. We're very happy to do just do a portfolio analysis and try to provide insights into that portfolio analysis and try to provide recommendations as a starting point. And we'll be very open, honest to say, hey, you have a very good portfolio. Seems like you're in a good hands right now. No need to change, or we have a lot of suggestions and probably you're going to need a lot of help. If cross-border is something that interests you, that's an area of expertise. So we're very happy to connect with new clients.
Fantastic, Yoel. Thanks for being on. For listeners, if you're a business owner looking to improve efficiency or scale using AI and technology, you can find me, Gary Wayne at A1 Solutions on LinkedIn or on my webpage. Yoel, thanks again. It's been great talking to you, and I hope we stay in touch.
It's been a pleasure, Gary. Thank you.